Hi YouTube, my name is WMBishop, also known as WMBishop on eToro. I'm here today to give you my monthly performance review for November 2022. So these are the returns for November in US dollar terms. The MSCI World Index, which is my benchmark, it's represented here by the ticker symbol SWDA.L in that blue line there. And the MSCI World Index for the month in dollar terms was up 4.71%. By comparison, the S&P 500, the orange bar there, was up 5.38%. And my portfolio is represented by the grey bar, which was up 8.03%. So a good month for all three, but my portfolio has clearly outperformed my benchmark and also the S&P 500 for the month. Now, what I do caution every month, no matter if it's a good month or a bad month, is that successful investing is achieved over the long term. The long term is not 1 month. We should not fixate too heavily on short-term monthly movements, because doing so just encourages the buying and selling of shares, and as we buy and sell shares, we incur transaction costs. The more transaction costs we rack up, the more money that is leaving our portfolio and harming our wealth. Therefore, returns over 3 to 5 years are far more important to look at. That's because when we buy shares, we buy a portion of a business, and businesses operate with plans usually over 3 to 5 years. And as their plans come to fruition, as their earnings grow, over time, this is translated into shares, into the share price. Last month, I introduced this line chart. My portfolio against the MSCI World Index with a notional $10,000 invested on the 1st of January 2021. The MSCI World Index, again, is represented by the ticker symbol SWDA.L and is the blue line on that chart. My portfolio is the orange line on the chart. And as you can see, despite my portfolio having a large cash position during 2021, it was quite neck and neck between the two portfolios. A gap emerged up from there. It widened up until April 2022 and has since narrowed. At the end of November 2022, $10,000 invested in the MSCI World Index would now be worth $10,251.72, whereas $10,000 invested in my portfolio would be worth $9,593.58, and so I am underperforming my benchmark by $658.14. Here is a new line chart for this month, and it's using the data shown in the previous line. It is my portfolio, the value of my portfolio minus the value of the MSCI World Index using that notional $10,000. And these are at monthly intervals. Where the values are negative, that means the MSCI World Index is outperforming my portfolio, and a positive value indicates that my portfolio is outperforming the MSCI World Index. And I think it provides a bit more information, a bit more clarity for the viewers. As you can see, the gap, as I've just mentioned, widened from December 2021 to the gap peaked at April 2022, where I was underperforming the index by $1,274.86. And as we end November 2022, I have almost halved that gap to $658.14. There are thousands of companies in the MSCI World Index, but there are not thousands of superior companies. There are probably less than 50 superior companies out there. 22 of them are in my portfolio. Over time, the superior characteristics of those businesses will result in outperformance in terms of revenue, in terms of earnings growth, and this will feed into the share prices, and I fully expect over time for my portfolio to outperform the MSCI World Index. If you follow me on the journey, you will see this too. So let's look at earnings for the portfolio for November. 2 companies reported revenue and earnings growth. That is Tegna, a broadcaster which is also a takeover target for Standard General, and D.R. Horton, America's largest home builder. Now, a lot of people are worried about owning shares in a home builder at this point because of the impending recession, because interest rates have gone up in 2022, and that makes houses less affordable. If houses are less affordable, there's lower demand. Lower demand leads to lower house prices. However, what many people miss is that there's a structural housing shortage in America. Supply is already far lower than the demand, which keeps the prices high. D.R. Horton, as America's largest house builder, are well equipped to deal with this situation. And as such, revenue for the company is up 20.5% this year alone, and earnings per share is up 44.7%. Because I have seen through the hysteria and I have maintained the investment in the house building company, my shareholders and I are enjoying the share price increase and the performance increase shown by D.R. Horton. 3 companies reported revenue growth but declining year-on-year earnings. That was Monster, the energy drinks company, Adidas, sporting goods company, and Copart, a marketplace for used cars. All 3 companies are expanding. The revenue growth with Monster and Copart can be seen due to increased sales. The situation is slightly different at Adidas, where they have a bulk of excess inventory due to the pandemic. They are currently selling through that stock by offering discounts, and so their revenue growth is higher, but as they are discounting the products, that has led to declining year-on-year earnings. Declining revenue and declining year-on-year earnings were seen at 4 of the companies: Estee Lauder, Medifast, Euronext, and Nvidia. Estee Lauder is predominantly a China situation. As lockdown restrictions ease in China, I fully expect the revenue and earnings picture to change dramatically there. The top 3 gainers for November: Nvidia, that was despite declining year-on-year earnings and declining revenue. They are strongly off their lows of September, where they were the 23rd strongest performing company out of 24 in my portfolio. And that is due to the optimism seen in their latest earnings report. Adidas reported earnings that were ahead of market expectations, despite the decline in earnings. And some of the share price appreciation has been due to the excitement around the new CEO. He is the former CEO of Puma. He performed wonders for that company, and the expectation is he will do the same at Adidas. Nike, up 18.34% this month, is my 3rd strongest gainer in November. Part of the optimism there is due to the perceived easing of restrictions in China. I made one change to the portfolio this month. I increased our holding in VeriSign. VeriSign are an online registry. If you want a .com or a .net website, or your company does, ultimately you pay VeriSign. They are the maintainer of the register for .com and .net. They're a strong company. Their growth isn't exceptional anymore. Growth is around, in revenue terms, the mid-single digits, but their return on invested capital is high at 31.8%. Their gross margins are 85.7%, their operating margins 65.9%. They're producing huge amounts of cash. They're using it to repurchase the shares, which in turn increases the earnings per share and then the share price for the shareholders. I did not make any sales of the portfolio this month. And if we go to the outlook, I continue to invest in companies with superior fundamentals, such as VeriSign, companies with high margins, high return on invested capital. Those companies have competitive advantage in comparison to those in the wider market, the wider market being represented by the MSCI World Index. Looking ahead to December, 2 companies are reporting quarterly earnings. I will look at those earnings and report my findings on eToro, and I will continue to invest the cash balance of the portfolio. I started November with 8.9% of the value of the portfolio in cash. I ended November with 7.7% of the portfolio in cash. That decrease of 2.2% was due to the purchase, 1.2% was due to the purchase of VeriSign, but it was also offset by, I believe, 11 dividends that were paid into the portfolio during December. The target for the portfolio is to have a zero cash balance because over time, equities, shares, always outperform cash. So there we go, that's my monthly performance review for November. I hope you've enjoyed what you see here. I hope you've enjoyed following me on the journey against the MSCI World Index, and I'm looking forward to updating you when I'm outperforming that index. None of what I have told you in this video should be taken as financial advice. It is just for educational purposes. If you've enjoyed this video, please give it a like, follow, subscribe here on YouTube, and you'll be alerted when there are more videos. And also, if you want to know more about my portfolio, please go to etoro.com/people/WMBishop. I'll put that link in the comments, and I will see you soon.